Welcome to Books to Riches. Today we're going to crack open a real classic.
Oh, yeah.
Burton G. Malkiel's A Random Walk Down Wall Street.
That's a good one.
It's a cornerstone of personal finance. And, a lot of you have been asking for us to give you some really actionable advice.
Straight to the point.
So that's what we're going to focus on in this deep dive.
Excellent. I think A Random Walk Down Wall Street is just packed full of strategies you can actually use.
Yeah. So let's get right into it. Malkiel's big idea, basically, is that instead of trying to outsmart the market-picking individual stocks, you're much better off in the long run with index funds.
Yeah.
But before we get into all that, let's talk about market bubbles.
Oh, yes.
Malkiel uses some really fascinating historical examples to illustrate this, like tulip mania.
Tulip mania.
This is a great one.
So 17th century Netherlands, right? People are trading their houses for tulip bulbs.
Yeah, it does sound crazy.
Sounds a little crazy.
But it shows how market psychology can really drive prices far beyond anything resembling reasonable value.
Right.
And Malkiel refers to this as the castle in the air theory.
Big castle in the air.
Where investors get so caught up in the hype that they essentially lose sight of the underlying worth of whatever it is that they're investing in.
That makes sense. And it's not just ancient history, right? We've seen this with the dot-com bubble, with the housing bubble more recently.
Right. Over and over again.
So what's the takeaway for us? What do we do?
Well, I think the takeaway is you need to be aware of this tendency, both in yourself and in the market as a whole. Don't get so swept up in speculative frenzy that you lose sight of real value.
Okay. Solid advice. So Malkiel argues that beating the market consistently is incredibly difficult. And he actually tested this right by requesting earnings predictions from top Wall Street firms.
He did, yeah.
And what did he find?
Well, it's fascinating because even over a 5-year period, these firms, with all of their resources and expertise, were surprisingly inaccurate.
Wow.
In terms of their predictions. So if the pros, with all their resources, can't consistently get it right, what does that mean for the average investor?
Well, it reinforces this idea of market efficiency, which is a concept that suggests prices generally reflect all available information. And this makes it tough to gain an edge. Like, you can't predict which way the market's going to go, up or down, with any consistency. Now, we need to consider the different levels of efficiency. You've got weak, you've got semi-strong, you've got strong.
Okay, break those down for us a little bit.
All right, so weak efficiency means that past price movements can't predict future ones. So technical analysis, which is basically charting, doesn't really work. You can't use past price movements to predict what's going to happen. And then you've got semi-strong efficiency, which says prices reflect all publicly available information. So it makes it very, very tough to gain an edge through research or analysis. Now, strong efficiency argues that even inside information can't give you a consistent advantage.
Wow, so that sounds like almost impossible to beat.
Exactly. So where does the market actually fall?
Yeah, where does it fall? Is it possible to beat the market?
Well, most evidence points to semi-strong efficiency. So it's really, really difficult to consistently find undervalued stocks because, as we just mentioned, the information is already baked into the price.
So how do we navigate this efficient market? Does Malkiel just say, give up, go home?
No, not at all. He emphasizes the power of diversification. So remember his really cool analogy about the island with an umbrella maker and a resort owner?
Oh, yeah, I remember that one.
Yeah. So their businesses, think about it, are inversely correlated. So if it's sunny, the resort owner's making bank, but the umbrella maker's not selling any umbrellas. If it's raining, the umbrella maker's doing great, the resort owner's not so much.
So you're covered either way.
Exactly. So by diversifying your investments, you spread risk and smooth out returns. Instead of betting on one single company to succeed, you're essentially betting on the entire market.
And that's where index funds come in. Instead of trying to pick individual winners, you're basically buying a piece of the whole market.
Exactly. And that's one of Malkiel's core beliefs. He believes that index funds should form the core of your portfolio. They're low cost, they're diversified, and they're designed to capture the market's overall growth.
Makes a lot of sense. Okay, so before we go all in on index funds, though, let's talk about building what Malkiel calls a financial fortress. Because he doesn't just focus on stocks, right? He stresses the importance of a solid financial foundation before you even get to that part.
Oh, absolutely. We need to think about having enough cash reserves for those unexpected emergencies that life is going to throw at you.
Right. Those always come up.
They always do. Adequate insurance coverage to protect against those unexpected events.
Right.
So This might sound basic to some people.
But sometimes it's the basics that we need to hear the most.
Exactly. The point is, it's about managing risk. Imagine you have an unexpected medical bill, wipes out all your savings. What do you have to do? You have to sell your investments at a loss. That's not a good situation to be in.
Definitely not. So how much should people keep in reserve?
Well, the general rule of thumb, and Malkiel suggests this, is at least 3 months of living expenses.
Okay.
Now, of course, this can vary. Someone with a super stable job and super low expenses may be okay with a little bit less.
Makes sense.
Somebody with a very fluctuating income maybe needs a bit more.
Okay. So insurance.
And
what are the must-haves?
Health insurance is crucial. Disability insurance can protect your income if you can't work.
Right.
And then life insurance is going to safeguard your dependents if something happens to you.
It's really just peace of mind, right? Knowing that you're prepared for whatever life throws at you.
Exactly. So now let's get into the more exciting stuff. Building wealth. So Malkiel has this great concept, time is your friend.
Ah, yes. Time is your friend. The power of compounding.
Exactly. And he has this amazing calculation, right? He calculated that $1 invested in stocks back in 1802 would be worth millions by 2014. It's a very powerful illustration of the power of compound growth. Essentially, the earlier you start investing even small amounts, the more time that money has to grow exponentially.
So it's not just how much you earn, it's when you start.
It's about how early you start and how consistently you invest.
Okay. So even if we can't invest huge sums right now, just starting small, being consistent, that's key.
Absolutely. And to really maximize growth, Malkiel suggests utilizing tax-advantaged savings plans, things like IRAs.
Okay, so can we break down those plans a little bit? Because I know some people, those get confusing.
Sure.
What are the key benefits of those?
So IRAs allow you to invest pre-tax dollars, meaning you don't pay taxes on those contributions until you withdraw them in retirement. And this can significantly boost your returns over time.
Wow, it's like the government is giving you free money.
Well, in a way, yes. These tax benefits can really add up big time, especially if you start early and you contribute regularly.
Okay, so these are must-haves for building a solid retirement nest egg.
Absolutely. Maximize, maximize, maximize. Malkiel is a huge advocate for maximizing these tax advantages to grow your nest egg as large as possible.
Okay, so this is all great advice so far. I feel like we're starting to build a solid foundation for financial freedom.
Yeah.
But we've been talking mainly about stocks.
That's right.
What about some other smart moves that we can make beyond just the stock market?
You're right. We'll get to those. We'll get to those after the break, including Malkiel's take on things like real estate and how that fits into the big picture. Stay with us. We'll continue unpacking a random walk down Wall Street and extracting those golden nuggets of wisdom.
We'll be right back.
Welcome back to Books to Riches. Before the break, we were talking about building that strong financial foundation.
Right, getting all our ducks in a row.
Exactly. Now let's explore some smart moves that we can make kind of beyond just the stock market.
Okay, so where do we go from here? What are some other things that we can do?
Well, Malkiel acknowledges that real estate can be a really good investment. Owning a home can really be a cornerstone of your financial security.
It's the American dream for so many, but it's also a huge commitment.
It is.
What about those who aren't ready or able to buy a house, or maybe they prefer something that's a little less hands-on,
right,
less responsibility?
Yeah, well, for those folks, Malkiel recommends looking into real estate investment trusts.
Oh, REITs.
Or REITs.
Yeah, I've heard that term thrown around, but honestly, I'm not sure I totally understand it. Can you just break that down for us?
Sure. So REITs are companies that own, operate, or finance income-producing real estate.
Okay.
So instead of buying a property yourself, you're investing in a company that owns multiple properties.
So it's like getting a slice of the real estate pie without having to actually, be a landlord.
Exactly, without all the hassle.
But how do they actually perform as investments?
Well, historically, REITs have provided pretty competitive returns.
Okay.
Comparable to the stock market, and they also offer the potential for regular income through dividends.
Oh, that's interesting. So they could be a good addition to a diversified portfolio, especially for someone who wants exposure to real estate, but, without the hassle of actually owning the property.
Yeah, exactly. Malkiel really sees REITs as a way to diversify and potentially boost returns, both, as you're building wealth and also during your retirement years.
Okay, REITs. That's good to know. I think that'll help a lot of listeners. Okay, so back to stocks.
Okay.
We've talked about index funds being, kind of the core of our portfolio.
Right.
But I know some listeners out there, they're itching to try picking individual stocks.
I get it.
What does Malkiel say to those aspiring stock pickers out there.
Well, he understands that allure,
Yeah.
but he cautions that it's a really tough path.
Okay.
Picking winning stocks consistently is extremely difficult, even for the professionals.
Yeah.
However, he does offer a few guidelines for those who want to venture into that territory.
Okay. Lay them on us. What are the rules for picking stocks?
All right, so first, Malkiel suggests looking for value in companies that hadn't really been recognized by the market yet.
Okay. Those hidden gems?
The hidden gems.
With solid fundamentals, but, they just haven't caught the attention of the masses.
So doing our research, finding those companies that might be undervalued.
Yeah, the diamonds in the rough.
Diamonds in the rough, okay.
But it takes more than just a hunch.
Right.
You need to have a really deep understanding of financial statements.
Yeah.
A knack for really analyzing a company's prospects.
So not a walk in the park.
Not a walk in the park, no.
Gotcha. So no getting swept up by the hype, even if it's like a hot new company.
Right.
Malkiel also emphasizes buying stocks with reasonable price-earnings ratios.
Yes.
Can you remind us what that means again?
Sure. So this is about making sure you're not overpaying for a stock, even if the company has really exciting prospects.
Right.
The price-earnings ratio compares a company's earnings to its stock price.
Okay.
Essentially, how much are you paying for each dollar of profit?
Gotcha.
Right.
Okay, so avoiding those inflated prices driven by hype.
Exactly.
Okay. What else should we keep in mind when we're picking stocks? Malkiel cautions against buying stocks just because their price has been rising.
Oh, yeah. Chasing those hot stocks.
Chasing hot stocks can be really tempting, but it can lead to losses when that momentum fades.
Yeah. Buy low, sell high.
Exactly. Be patient. Do your research. Don't let fear or greed drive your decisions.
Right.
Malkiel emphasizes a long-term perspective.
Okay.
Time in the market is more important than timing the market.
And that really circles back to his main point, that index funds are often a more reliable way to kind of capture that market growth over time.
Exactly.
Okay, so you buy your index funds, you're in it for the long haul. Time is your friend.
Right. And even with index funds, Malkiel emphasizes the importance of regular portfolio rebalancing.
Okay. Yeah, I've heard that term before, rebalancing, but I'm still not quite clear on what it means. Can you explain that for us and why it matters?
Sure. So rebalancing means adjusting your portfolio to maintain your desired asset allocation.
Okay.
So let's say you start with 60% stocks and 40% bonds.
Right. Classic 60-40.
Exactly. Over time, stocks might outperform bonds.
Yeah.
Shifting your allocation to, say, 70% stocks and 30% bonds.
So your portfolio has kind of drifted from its original target.
Exactly. And rebalancing involves selling some of those stocks and buying more bonds to bring it back to that 60-40 split.
Oh, okay. So it's a way to kind of manage risk and keep your portfolio aligned with your goals.
Precisely. It helps maintain your desired level of risk, and it prevents overexposure to any one asset class.
Okay.
Malkiel recommends rebalancing at least once a year.
Okay.
Or more frequently if there are really big market swings.
Gotcha. All right, so we're rebalancing our portfolio, we're staying disciplined, and we're letting time work its magic.
Right.
But everybody's situation is different.
That's true.
Does Malkiel address that? Does he offer any advice for different situations?
He does. He offers what he calls a life cycle guide to investing.
Okay.
Suggesting that your approach should evolve as you age and your financial needs change.
Makes sense. So what does he recommend for someone who's younger versus someone who's nearing retirement?
Well, when you're younger, you have more time to recover from market downturns, so you can afford to take on more risk.
Okay.
That means a larger portion of your portfolio should be allocated to stocks, which historically have higher returns,
Right.
but also more volatility.
More ups and downs.
As you get closer to retirement, you gradually shift to a more conservative approach, increasing your allocation to bonds.
Makes sense. But I guess you wouldn't want to be entirely out of stocks even in retirement.
Exactly, because you still need to protect your savings from inflation, and stocks have historically been a good hedge against those rising prices.
Right.
Malkiel suggests even retirees consider having at least 40% of their portfolio in stocks.
So it's a balancing act, right? Risk versus return,
Right.
time horizon, personal goals.
Yeah.
Malkiel gives us a really good framework for thinking about asset allocation throughout our lives.
He does?
Okay, so we've got that, but let's not forget about taxes.
Oh, yes. The tax minute.
Right, because those can really eat into your returns over time. Malkiel really emphasizes tax-efficient investing. So any tips for minimizing that tax burden?
Well, first take full advantage of those tax-advantaged retirement accounts, things like IRAs, 401k.
Right.
Contributions are often tax-deductible,
Okay.
and investments grow tax-deferred until retirement.
So that's a huge break.
Essentially, yes. It's a tax break on your savings and investments.
Okay.
Malkiel recommends maximizing contributions to these plans whenever possible.
Right.
And he also suggests considering municipal bonds, especially for those in higher tax brackets.
Municipal bonds, I'm vaguely familiar with those. Remind me, what are those again?
So municipal bonds are issued by state and local governments.
Okay.
And their interest income is often exempt from federal income taxes.
So if you're paying a lot in taxes, municipal bonds can really boost your after-tax returns.
Exactly. Malkiel provides a lot more in-depth information in the book about choosing the right bonds and managing those bond investments effectively.
Well, okay, this is a lot to digest. We've covered so much here.
We have
Diversification index funds.
a little stock picking.
A little stock picking if we're brave rebalancing.
Life cycle investing.
Life cycle investing taxes. I mean, the whole gamut.
It is a lot, but remember Malkiel's central message, it doesn't have to be complicated.
Right.
Focus on the long term, keep costs low, stay disciplined, and you'll be well on your way to financial freedom.
That $1 invested in 1802 turning into millions by 2014 is a pretty convincing argument.
It really is. It shows even small, regular contributions can grow exponentially over time. Don't underestimate the power of starting early, even if it's just a little bit each month.
Yeah, so even if we can't invest huge sums right now, just building those good habits early on, that's key.
Absolutely.
And as we go through life, Malkiel encourages us to think about our goals and how investing can help us achieve those goals.
It's not just about retiring wealthy. It's about using investing as a tool to achieve the things that you want in life.
Exactly. Whether it's, buying a house, funding your dream vacation, starting a business, or, just ensuring a comfortable retirement investing can really help you get there.
Absolutely.
Okay, so we've covered a lot of ground here today. Market bubbles the challenges of beating the market.
The power of diversification index funds.
The allure and the risks of stock picking, even touched on some more advanced strategies like REITs.
It's been a really thorough deep dive into Malkiel's wisdom.
And I think anyone listening to this will now have a really solid framework for building a brighter financial future.
I think so too.
I know I feel a lot more equipped to handle my own finances.
Good.
And, it's refreshing to hear that investing doesn't have to be overly complicated.
No.
It's about having a solid plan, being patient, and, just making smart choices.
Exactly.
Right. Malkiel's book really empowers us to take control of our finances.
It does.
He gives us the knowledge and the insights to make those informed decisions and create a plan that aligns with our goals and our values. I want to circle back before we wrap up to one of Malkiel's key analogies that really stuck with me, and that's the $100 bill lying on the street.
Oh, yeah, the one where the professor assumes it can't be real.
Yeah.
Because someone would already picked it up.
Exactly. But what if there are still some overlooked opportunities out there? Maybe not literal $100 bills, but hidden gems in the market waiting to be discovered.
It's a great metaphor for the potential rewards of careful research and thoughtful investing.
Right, so don't be afraid to challenge conventional wisdom. Do your homework, explore different perspectives.
Yes.
The journey to financial freedom is ongoing, and it's in our hands.
We have the power.
Well said. Well, thank you for joining us on this deep dive into a random walk down Wall Street here on Books to Riches.
It's been a pleasure.
We hope you've gained some valuable insights and feel empowered to take control of your financial journey.
We do.
Until next time, happy investing.
Happy investing.
Welcome back to Books to Riches. We left off talking about these kind of interesting investments.
Yeah.
Closed-end funds.
Right.
So let's dig into those a little bit more. What makes these unique?
Well, closed-end funds are interesting because they can trade at a discount or a premium to their net asset value.
Okay.
NAV.
And before we go any further, can you just remind us what NAV is?
Sure. So NAV represents the per-share market value of the fund's assets. It's basically what the fund's holdings are actually worth.
Okay, so a closed-end fund trading at a discount means you're basically buying those assets for less than what they're actually worth.
That's the idea, yeah. If you can find a fund trading at a significant discount, and that discount narrows over time, you could potentially make a nice profit.
But that sounds a bit like, trying to time the market, which Malkiel kind of warns against. Is it risky?
It can be, yeah. It is riskier than a simple index fund strategy. Malkiel doesn't advocate for closed-end funds as a core of your portfolio. He sees them more as a potential opportunity for more sophisticated investors, maybe. Ones that are comfortable with the added complexity and risk.
So yeah, do your research. Really understand what you're getting into.
Yeah, for sure. You need to understand why the fund is trading at a discount, the quality of its holdings, the track record of the management team, all of that.
Okay, so we've got this whole toolbox now.
Yeah.
We've got our financial fortress. We've got our diversification strategy. We've got our index funds. We even got a little taste of stock picking, if you're feeling brave. Um, what's the big takeaway here? What do we do with all this?
I think it all comes back to Malkiel's central message.
Hmm?
Time is your greatest ally. Start early, invest consistently, and let that magic of compounding do its work.
It's true. That $1 from 1802 turning into millions.
Millions.
Pretty compelling argument.
It really is. It shows the power of even small regular contributions can grow exponentially over time. So don't underestimate the power of starting early, even if it's just a little bit each month.
Okay, so even if we can't invest huge sums right now, building those good habits early on, that's key.
Absolutely. And as you go through life, Malkiel encourages us to really think about what our goals are and how investing can help us achieve those goals.
Yeah, it's not just about retiring wealthy. It's about using investing as a tool to achieve the things that you want in life.
Exactly. Whether that's buying a house, funding your dream vacation, starting a business, ensuring a comfortable retirement, investing can help you get there.
Well, this has been fantastic.
It has.
I feel like we've really done a deep dive into a random walk down Wall Street.
We covered it all.
We covered market bubbles, the challenges of beating the market, the power of diversification, index funds, the allure and the risks of stock picking, even touched on some of those more advanced strategies.
We did. I think anyone listening has a really solid framework for building a brighter financial future.
I agree. I feel much more equipped to handle my finances now.
Yeah.
And, it's really refreshing to hear that investing doesn't have to be overly complicated. It's about having that solid plan, being patient, and just making smart choices.
Right. It's really about empowerment. Malkiel's book, I think, empowers us to take control of our finances. He gives us the knowledge and insights to make informed decisions and create a plan that really aligns with our own goals and values.
Absolutely. Well, before we go, I want to leave our listeners with one final thought. Going back to one of Malkiel's key analogies, that $100 bill lying on the street.
Oh, yeah. Yeah. The professor who assumes it can't be real.
Exactly. But what if there are still some overlooked opportunities out there? Maybe not literal $100 bills, but hidden gems in the market waiting to be discovered.
That's a great way to put it. A great metaphor for the potential rewards of careful research and thoughtful investing.
Exactly. So to our listeners, don't be afraid to challenge conventional wisdom, do your homework, explore different perspectives. The journey to financial freedom is ongoing, and it's in your hands.
You have the power.
Well said. Thank you for joining us on this deep dive into a random walk down Wall Street here on Books to Riches. We hope you've gained some valuable insights and feel empowered to take control of your own financial journey.
Absolutely.
Until next time, happy investing.
Happy investing.